Well, fast casual restaurant chain Portillo's delivered mixed results for its third quarter. The company came in line with earnings per share, but missed on revenue expectations. Expenses rose over the quarter, driven by the opening of new locations and increased labor expenses as the company focused on its expansion goals. During the quarter, Portillo's opened 2 new locations, bringing its total to 78 restaurants. Earlier this year, it announced a long-term goal of opening more than 900 locations across the U.S. I'm joined now by Osanloo, Portillo's CEO. Thank you so much for joining us this morning here. Now, we're seeing the stock price not being affected here by what they saw on that earnings report here. What do you think is having investors at least confident about where Portillo's is going, especially when it comes to this aggressive expansion plan?
I think your headline is wrong. I think that, yeah, there was a slight miss on comp, but a big beat on the bottom line. Our restaurant level margins were fantastic. Our EBITDA was fantastic. And I think we're the only growth company that can self-fund all of its growth. And I think that's what investors love, is that Portillo's is a highly profitable growth company that self-funds its growth. And so that's why I think the savvy investor is reacting to our stock price based on that.
I mean, the revenue did have a miss of almost $4 million. I mean, so that headline is actually correct. But I want to dig deeper into this because a lot of what we're looking at is also the state of the consumer. So what are some of the changes that you've seen and how some of your customers are perhaps either approaching what they're buying or trading down or making different choices?
Yeah, I think the consumer, look, I think we're back to something that's probably more normal. Going back to the cycles in 2019, third quarter tends to be a sluggish quarter for fast casual and QSR. That's what we're seeing. And we're seeing a bounce back in the fourth quarter. I think we talked about this in our earnings announcement, that there's a lot of positive momentum in the fourth quarter. So I think some of the estimates might have been a bit too aggressive by some of the banks for the third quarter. And I think that you're seeing the fourth quarter play out. I think the consumer is resilient. It's a really interesting dynamic. I listened to you guys a little bit. Yeah, I think there's a low end consumer that might feel a little bit of pressure. And I think that what you're seeing with the low end consumer is a flight to the discount brand. So the big QSRs that discount. But the main consumer, most of those people are pretty resilient and they're still enjoying going out to eat and they're looking for great value. Value isn't always just price. It's also the quantity, the quality, and the experience. And so if you can provide great overall value, I think this is a fine time for them.
And something I did want to ask you about this, obviously the popularity, a lot of these weight loss drugs, we haven't necessarily, it's very early days, so we haven't necessarily seen it show up, but there's sort of a mixed picture here. We had an analyst from Goldman saying, look, it's actually going to be some of the healthier foods that end up suffering because, people are going to be feeling good and losing weight and wanting to, indulge a little bit more. But then when it came to Walmart, they saw people pulling back on this. What are you seeing in terms of the potential, or how are you perhaps bracing for the potential of how these weight loss drugs might affect business?
I think there's a lot of speculation. I mean, even the Walmart quote that you're saying was they're speculating that it might be these weight loss drugs. I think that speculation is wonderful for traders who are aggressively buying the weight loss manufacturers and shorting restaurant stocks. They look like geniuses for a quarter. I think we'll see how it actually plays out. I think people, there's a tiny, tiny percentage of people that use those drugs. It's not going to meaningfully move the restaurant industry. So I think right now it's a lot of noise that supports certain trading behaviors, but we'll see if there's any actual reality behind the noise.
And something else that we're seeing in terms of trends with AI, you have some food companies who are like, look, we want it to be more of a neighborhood community feel. We don't want, robots serving people. How are you approaching some of the advances in AI, perhaps whether it's supply chains versus in the actual restaurants themselves?
That's a great question. I think, and this has been an ongoing trend in terms of, let's call this labor arbitrage, people using kiosks and other things to displace human beings in restaurants. I think it's going to bifurcate. I think that there are restaurant companies and types of people who still enjoy human interaction. So talking to a human being, ordering something, seeing people making your food, I think there are restaurant companies that will do that. I think there are restaurant companies that are quickly moving down the path to being glorified vending machines. And so that's the bifurcation of what's happening. Now, AI and technology that supports back-of-house activities, prep work, low value added things that neither guests nor team members value, great idea. If you're replacing human beings and human interaction with technology, that's a little bit more of a dangerous proposition, I think, over the medium and long term.